Welcome to Small Cap Asia, a platform where Asian investors connect with company CEOs. I'm Singing, your host, and this interview is disseminated on behalf of Sonoro Gold. Today, I'm speaking with Kenneth MacLeod, President and CEO of Sonoro Gold. Sonoro Gold is a junior gold developer focused on building its first gold mine in Mexico. The company holds a strong land position in the mining-friendly state of Sonora and is now in the final stages of permitting, ready to move into production. Sonoro Gold is listed on the TSX Venture Exchange under the ticker symbol SGO. Hi, Kenneth. Thank you so much for joining us today. We have a lot of exciting ground to cover, so let's get started.
Well, thanks for inviting me, and I'm looking forward to our conversation. Sonoro Gold Corp is a Canadian-based mining company operating in Mexico. We're developing a project called the Cerro Caliche Gold Mine in Sonora State, Mexico. And the first thing we're going to do just now is I'll give you a brief presentation that will take a few minutes, and then we can ask questions afterwards. So the first thing we need to talk about the forward-looking statements. That's pretty well standard for most securities that are looking at forward-looking statements. These statements may come to pass or may not as time goes by, but we wanted to bring your attention to it at first. We have a very powerful team operating and managing the company in Canada and the projects in Mexico. Each one of our key players has had over 40, 45 years at least experience in the gold sector and in securities and raising capital. John Darch has built many companies over the years. Jorge Diaz has built as many as 12 gold mines in Mexico over the years, even running his own private company as well. I've been operating resource companies around the world since the 1980s. And Mel Herdrick, he's got over 5 million ounces of gold discovery to his credit. Chief geologist Oscar Gonzalez, he's been operating in the region where we're going to build the mine. He's been operating there for the past 25 years. As the share structure is concerned, we have approximately market capitalization of somewhere in the order of about $90 million Canadian or $65 million US. Its number of shares issued and outstanding is 315 million, and we have warrants that, when exercised, will bring the fully diluted to approximately 420 million shares at that time. The warrants, when they are exercised, will bring in probably around about another $25 million Canadian. We're operating in northern Mexico, in the northwestern part of Mexico, bordering on the state of Arizona. We're surrounded by producing mines and soon to be producing mines. And more notable ones, the gold star is our Cerro Caliche project. The blue star is a secondary project that we will be developing over time, and that's called the San Marcial project. So we're about a 3-hour drive from Tucson, Arizona to the north, and a 3-hour drive to the capital of Sonora State, Hermosillo, to the south. So Sonora is the number one jurisdiction in Mexico for mining. 25% of GDP is directly related to mining, and you can add another 10% to the top of that for downstream benefits from mining as well. The location-wise, again, we are in an area that is essentially free of any kind of complications such as environmental or social issues. Cerro Caliche project, as you can see here, to the southeast is a Mercedes mine, same structure, very similar geology. To the north, Santa Gertrude is operated by Agnico Eagle. And we are blessed with a situation where we're operating on a ranch that is owned by effectively our landlord. And there's another operating company operating mine on the ranch as well. So there's a long history of operating with mining companies in the region. It's an oxide gold deposit that we're developing here. And as a result of that, the mineralogy is very benign. There's no potential for acidic discharge or anything like that. As far as people in the area is concerned, the nearest habitation is Cucurpe, the town of Cucurpe, 16 kilometers distant, and the people there very much want us to develop this mine. As far as the surface rights are concerned, it's very important in Mexico that you have a definition of what the mineral rights are, which means that you can go in there and develop a deposit. You can drill your deposit, But when it comes time to actually go into mining production, you actually need the surface rights. Well, we already have the surface rights for over 5,000 hectares, and the area of the concession now, it's not shown in this particular map here, is expanded to almost 4,000 hectares as well. It removes a major headache for many miners when they try to go into production. So the original size of Cerro Caliche, as you see in yellow here, was just under 14 hectares. And recently we tripled the size of the concession by acquiring the area in blue to the north and the areas in blue to the southeast and the southwest. The areas you see in red on Cerro Caliche are mapped structure, known mineralized zone. These are vein structures that are trending northwest and very definitively northwest, as you can see as well. And these trends also go into the new extensions to the north and to the south. Now, we also estimate that less than 30% of these known mineralized zones have been drilled and assayed to date. So it gives you an idea of the potential for increasing the size of the resource dramatically. So recently we had a new preliminary economic assessment issued on the project, on the Cerro Caliche project. And the base case was taken at $3,500 an ounce for gold. Now, as you already know, gold is trading at $4,700, $4,800. And recently when the report was published, it was trading at over $5,000. But it gave us a good idea of the value of the project. So when you take a look at the total number of ounces that are mineable, it's almost 800,000 ounces. And when you're heap leaching a gold mine, for example, the recovery rate in our case here is in the field 72%. That gives you 458,000 ounces actually recovered. That's what you sell into the market. For building this mine, capital costs initially are $83 million, and which makes it, by any stretch of the imagination, a low-cost project to build. Over the life of initial 10-year life of mine, sustaining capital will add another $26 million in cost. So basically, the bottom line at this point is that the cash cost per ounce are $1,800, and the AISC, or the all-in sustaining capital, is in the order of $1,900. Now, once again, I want to emphasize gold is currently trading at $4,700 or $4,800. So the margin for a profit there is very, very substantial. So to summarize once again, that yields when you look at $3,500 gold base price, gives you a net present value after tax of $224 million US, which is in the order of over $400 million Canadian. We're currently trading at a market capitalization of about 80, let's call it $90 million Canadian. So there's a big margin between where the market capitalization is today and where we expect the value to go when we start to match the inherent value of the project. And as you can see from this slide here, obviously the higher the gold price goes, the higher the value goes. And for every $100 that the gold price goes up, the value to the company is actually even more than 100. It's probably double on the basis of the recovery. Since 2018, when we acquired the project, we've been drilling between 2018 and 2022, and then we started producing preliminary economic assessments. And we've now delivered the third one just very, very recently. And there's a snapshot of how the vein structures are looking. And this gives you a good idea when you look at the central area of the cluster of all these different zones, Japonesas, Beta de Oro, Cabeza Blanca, Colorados. That is a cluster of vein structures that will be the first to be mined in the project. Keep in mind that the goal for the company is to get into production with the known mineralized resource that we currently have, with a gold resource that's already been demonstrated in the PEA, and put it in production, generate cash flow, and use that cash flow to expand the resource dramatically, hopefully over the coming couple of years. In the meantime, we are taking steps now to launch the drilling program right away. But I want to give you an idea of how there are areas of higher grade, like off to the west here, section A, and B, and you're looking at significantly higher grades in this area 27.5 meters of 5.5 grams in the bottom right-hand corner, including a 46-gram intercept as well at 50 meters. So this is the kind of grades that friends 10 kilometers away at the Mercedes mine are seeing at 300, 350 meters below surface. And we're seeing it near surface as well. So here's another example of a good to higher grade zones, 22 meters of 1.5 grams and 3 meters of 19 grams. These are all very, very exceptional higher grade zones. We believe that when we drill deeper, we should be able to extend the resource into a deeper zone, maybe even eventually discover the potential for an underground mine as well. I'll show you this slide because it's so easy to demonstrate that the strip ratio was low. It's 1.6 to 1. And as a result, you essentially start mining from the surface. Here's another example of mining from the surface. Now we bring it up to date, and we recently outlined how to embark on a 50,000 meter drilling program. Several reasons for that, of course, is A, of course, to expand the size of the resource, B, to increase the life of the mine, and maybe from 10 years to multiples of that. And thirdly, increase the throughput on a daily basis. And so that would have a dramatic impact on the bottom line for the project. And as you can see from here, from the southeastern part of where we're drilling and where we have mineralization to the northwestern part is over 6 kilometers in length and multiple mineralized zones, parallel structures that are mineralized all throughout the project site. So we will be drilling those holes over it probably is going to take us a year to 15, 16 months. And obviously we will have ongoing news as that is happening. In the meantime, we're still working on getting the approval to build the mine, and that'll happen in parallel. That'll be building the mine will be in parallel with the drilling program. There's a snapshot of how the mine looks. So it's very simple. There's no major structures here. You're looking at an open pit area with very light cover. The stripping will take us in the first few months. We'll focus on stripping the first few years of operations. And once we get into production, then we go through a crusher to the leach pad. The crushed material goes to the leach pad, and the sodium cyanide releases the gold from the rock formation and end up producing a doré bar at the end of the day. And then on to the most important thing for you maybe today would be, once we get the MIA approved, MIA is the environmental impact statement in Spanish. Once we have it approved, how long is it going to take to actually pour the first doré bar? And I'm showing on here, on a conservative basis, it's 13 months. So during that period of time, we will continue with the drilling, and the construction finance will take us approximately 2 to 3 months. We already are talking to potential financiers. Mine engineering, we already started on it. So I'm comfortable in stating that we should be pouring the first doré bar within 13 months of getting the MIA approval. And we've been working hard at getting that. And expectation is, I can't tell you exactly which date, but we expect it to happen soon. The other project I want to emphasize today is the San Marcial project. It's about 30 kilometers southwest of the Cerro Caliche project. It's drill ready. We expect it to have similar kind of potential to what we have at Cerro Caliche, and over the coming year, we should start to realize upon that potential. So to summarize, we have a great team in Mexico and Canada. We have a great project, one of the finest gold projects in Mexico. The company has a very, very strong shareholder base within the insiders, and we control approximately 25 to 30% of the shares in the company. And every time we do a financing, we like to maintain that degree of control. Our business plan calls for us to go into production and continue with the drilling program to continue expanding the resource. And as far as financing is concerned, we've been very successful this year in raising capital. And over the years, we've raised hundreds of millions of dollars for projects around the world. And thank you very much for listening.
Thank you very much for the presentation. So right now we can move on to a few questions.
Yep.
And I'm going to start off with, Okay, right now your independent PEA shows a 50% after-tax IRR, a $83 million initial capital requirement, and a payback period of under 2 years. So for investors accustomed to large-scale capital-intensive mining projects in Asia and Africa, what makes those numbers so rare, and why does Cerro Caliche heap leach model specifically produce them?
Well, that's an excellent question. And the reason that the capital costs are so low is because an open pit heap leach mine does not have any massive structures involved with it. There's no concentrator. You have an open pit, you have a little bit of overburden that you have to scrape off, and then you start mining. And that typically is anything from 0 to 10 meters or thereabouts. So you move the rock over to the crusher, crush it, get it on the leach pad, spray the sodium cyanide, and you deliver a doré bar. It's as simple as that. The largest single engineering item would be the flattening of the area where the leach pad is going to be. It's like a giant football field. And once you have that done and confirmed, then you can start your operation. So the costs are low in that regard. Secondly, heap leach mine is very efficient. There are so many heap leach mines that are operating in Mexico, and the expertise for designing, building, and operating these is very real. Mexico is one of the leading contenders in the world for engineering and knowledge of operating open pit heap leach mines. And then the other aspect of it would be that the capital costs have been reduced because of the fact that our team is so knowledgeable in how we can eliminate excess costs. And therefore, we've been able to keep tabs on the fact that because we're operating other mines in the region, that expertise can transfer over to this proposed mine at Cerro Caliche as well. So that's why the capital costs are so low. And the other thing as well that I think is important is that the resource is very, very close to the surface. When you compare the building of an open pit heap leach mine with an underground mine, the costs go up dramatically, tenfold when you go underground. Now, I'm not saying that we'll never go underground, but it would be a good problem to have if we continue to drill and drill deeper and find, oh yeah, there's potential here for an underground mine, because typically the grades are significantly higher. That offsets the fact that costs for an underground mine are higher. But that would be a problem for the future, and it would be a very, very pleasant problem to have.
Okay, so now beyond the economics, there is also the question of what you actually own and control. Sonoro has secured 100% of the surface rights, made the final concession payment, and now holds a property that has nearly tripled in size when the Mexican government has formally stopped issuing new mining concessions. So how does that combination of secured tenure and a closed door for competitors change the strategic value of what you hold?
Yeah, it's interesting. You have a Mexican government of which a significant percentage of the GDP is reliant on mining companies. And at the same time, they haven't granted new permits for granting new concessions in 6 years. Taking that into account, the companies that already have the concessions, such as us, are very well positioned, of course, to continue to capitalize the fact that Mexico is very well endowed with mining gold, silver, and other metals as well. So where we're sitting right now, there's waiting on the environmental impact statement to be approved. That is the sole thing that has held us up now. And in fact, it's been a few years. We've been seeing much progress. The prior administration in Mexico was anti-mining. In October 2024, President Chan was inaugurated, and since then, there has been a tremendous number of mines that have been approved, both underground and open pit mines. And many of them have been extensions or expansions of existing operations, but there have been, in recent months as well, new open pit mines have been granted. So there's still a backlog of over 100 mines that are waiting for approval, and we're one of them. But I see the potential for us to get their approval. I don't know about the coming months, but in due course, it will happen.
Okay. So, and that brings us to the question of valuation. Sonoro is trading at roughly 22 cents on the dollar relative to your independently assessed after-tax net asset value. Gold is at very attractive levels around $4,700 per ounce. So, for an investor trying to understand why the gap exists and what closes it, what is the single catalyst that transformed the market's view of this company?
Well, that's once again a very, very good question. Well, I think that is the defining question of the day is what's a catalyst for making the share price of Sonoro reflect a truer valuation? And so I believe that catalyst will be obtaining the approval to build the mine, the environmental impact statement, getting it approved. We have been waiting for that for quite a long time. We have been dealing with financial people that are working with us on the basis of providing the debt and the equity to build the mine. With the price of gold now approaching $5,000, the ability to secure mostly debt is very real, and we believe that that is the best way of financing the project. So when we go from the current situation of a development company where the inherent risk is, of course, very obvious, and that is the waiting for the environmental impact statement approval. And then once that risk has been removed, then it becomes a much more attractive investment for institutional investors. Right now, we have speculators, and they're working on the premise that we're going to get the approval sooner or later, and they're happy to wait with us until we get the approval. But once we have that approval, the company will appeal to a different breed of investors, mainly institutional investors. And that's where the big money comes in to see us through to achieve more financings to keep on expanding the resource, and B, to expand the size of the mine as well. Once we have achieved a greater degree of mineralization at the project level.
Okay. Right. Moving on to the last question. Mexico has a long history of successful mining operations, and Sonora State in particular has produced gold and silver for centuries. So your ejido agreements and surface rights are fully in place. And for investors who are weighing jurisdiction risk, what does operating in Sonora actually look like on the ground? And what has your team built over the years that gives you the confidence in what comes next?
Well, I'll start off with what's a team built over the years. And the main technical team under Jorge Diaz and Mel Herdrick, they have been involved, like I said, with at least 12 gold mining companies or gold mining projects in Mexico over the years, and involved in everything from exploration all the way through to actually designing and operating gold mines as well. So we're very, very knowledgeable and very experienced in that regard. And much of that expertise has been within Sonora State. And I want to emphasize Sonora State is a very fine jurisdiction for permitting and designing and building a gold mine. The government is very supportive of the gold miners. And like I mentioned before, the 25% of the GDP is reliant on the mining sector, mostly gold. Now, going forward from that, where do we fit in? The answer is we're in an area that is slightly depressed right now because no new mines have been built in the region in the past 6 years as a result of governmental policy. That means that the GDP of Sonora State is under threat. And obviously, the government of Sonora do want to see our mine go into production, and we're very happy for that support as well. But also at the regional level and at the district level, we have people that are, waiting for us in the towns of Cocurpe and which is the nearest town to us in Sonora, about 16 kilometers away, a population 750. And they are looking forward to the mine going into production because we'll be providing high-paying jobs for their people. The town of Magdalena, which is about a 45-minute drive away from the project, is a mining hub, and quite a few of the mines have actually run out of ore in the past 10 years or so. So they're looking forward to new mines coming on stream. So I believe that there is no issue at all with you brought up the term, the ejido. Ejidos are typically They are like the landowners in a district that work together to effectively control what happens in the district, and they tend to negotiate with the mining companies that are coming in to get the best deal possible for their people. But we don't have any ejidos. We have a rancher that is very cooperative and has been working with us over the past 8 years now, and as we're developing this project here. So all in all, at this point, we believe that all the conditions are ready and in place in order for us to capitalize on the value of this project. And all we're waiting for is the approval of the environmental impact statement. Once that happens, we're off and running.
Okay, great. It seems like the company has an exciting road ahead in 2026. Thank you so much, Kenneth, and that's all the time we have.
Thank you very much. It's been a pleasure talking to you.